I think today was a pretty historic day in terms of India's monetary policy framework, because for the first time we had a 6-member monetary policy committee set interest rates rather than the governor. And this is the culmination of the institutionalization of the new monetary policy framework. We've now gone to headline CPI targeting. The RBI Act itself has been amended, and we have a functional and operational MPC. So in many respects, I think today is a huge institutional reform and a pretty historic day. In terms of the takeaways from today's policy, I think today's action was not particularly surprising. The fact is food prices have declined quite substantially in August and September. And therefore, our belief now is that the 5% target that the RBI has set itself is very much in reach, and we see the risks towards 5% in March 2017 to either be balanced or slightly to the downside. A combination of strong sowing, a normal monsoon, and therefore we think as long as production is quite strong in the months ahead, food prices should continue to decline. And if you look at core inflation, even that has shown some signs of softening in recent months. So we had believed that some space for monetary easing was opening up between 25 and 50 basis points. And we reiterate that belief after today's policy statement. So after today's cut, we actually think the likelihood of another 25 basis point cut in December has increased. We forecast CPI inflation to fall to meaningfully below 5%, closer to 4.5% by September, and for CPI to go to 4% or below by November. So I think that will give the central bank some elbow room to cut rates at the December review. There's also the possibility, I think, next year that you could still get a little more easing, though not much. The amendment to the RBI Act says that the medium-term goal for the RBI is 4% inflation. So the RBI has the flexibility of operating in the band from 4 to 6 over the coming years. There are clearly some upside risks, as the central bank highlighted. The HRA allowance and both the first round and second round impact on inflation, what the eventual GST tax rate is, and therefore its impact on CPI and inflation expectations. Those do create some upside risks over the next 12 to 18 months. But the fact is that barring that, barring meaningful those upside risks being realized, the RBI does project inflation to moderate to about 4.5% by March 2018, and I think that may open up a little more space for easing in 2017.